Hello, I'm Lelde Smits for Modern Wall Street. Joining me here on the floor of the New York Stock Exchange is Stephen Guilfoyle. Stephen, welcome.
Oh, the pleasure once again is all mine. Thank you.
Wonderful. Well, look, it is Wednesday on Wall Street. We have had so much economic data released today. What's been the highlight for you?
There's so much to choose from. But, durable goods orders were very impressive. 3% gain month over month, more than expected, and not really with the help of transportation. So it's real actual purchases of durable goods, not just airplanes and trucks and trains and the like there. I also like how personal income was 0.4% gain for this month and raised to 0.2 for last month, both larger than consumer spending, which some think isn't really good, but let's face it, people got to save before they're going to spend. So let's get the people comfortable, and then we'll be all right.
Absolutely. We've got a lot of spending coming up, of course, in the coming weeks with the festive season just around the bend. But what has all of the economic data today done for your interest rate forecast for December?
It doesn't change anything. I think we're probably on track for an increase in December, interest rate-wise, at least for the Fed funds rate. And none of the data has really belayed that. We did see 9 of the 12 Fed regionals, I think on Monday, come out in favor of an increase in the discount rate, which they have to raise the Fed funds rate before they'll ever raise the discount rate. So that is also another supporting factor.
Okay, so we may be on track for a rate rise next month. Are we on track for a Santa rally?
Well, generally speaking, between Thanksgiving and the New Year, we'll see close to a 2% increase in the S&P 500. At least that's been the norm over about a 65-year range. If that were to be the case, that would put us in the 2130s for this year. My personal target is still 2150. I hope we get there because I'm lined up for it, and time will tell.
And Stephen, as we start to hear those jingle bells, what are the kind of stocks that you're looking out for around the festive period?
I think you have to be in the energy game right now. With everything that's going on in the world, I think energy is the play. We just saw a little bit of a short squeeze after those comments by Saudi Arabia the other day and the military actions that we've seen in the Middle East. So we've seen a minor short squeeze. The commodity is coming in today a little bit, but I think if you're playing the actual stocks, you get that big dividend payoff, the big dividend yield that most of them still have, even if you're wrong about the commodity.
Okay, Stephen, we do have Thanksgiving Day tomorrow. Then we've, of course, Black Friday, Cyber Monday. But on the markets front, what should traders be paying attention to apart from the turkey next week?
Next Friday, I think, is another jobs day, right? And that could be the one thing that derails that interest rate hike. So you have to be paying attention to it. Otherwise, we don't have a whole lot outside of the ISM manufacturing data next week. It's going to be a rather light week and with a lot less earnings, of course.
Okay, so no time to rest just yet, but I will give you a day off tomorrow. Thank you so much for your insights today.
I appreciate it. Thank you.